Hey, Andrew here from the Investor's Way, and welcome to Woody's Weekly Wisdom, episode number 67. And today I'm looking at our favourite topic, interest rates. And I'm looking at this article here, alarming figure ahead of RBA rate decision. And it's a bit of a crossover episode because we are going to actually have a look at two stories related to this because of what I would say is all of the conflict information that's out there that no doubt is creating a whole lot of confusion or maybe even overwhelm when it comes to what's the direction for interest rates and what should I look at to tell me where the next decision point might come from. And you're going to see today how difficult that can be when there is so much information out there that conflicts with the previous piece of information that you may have looked at. And we're looking at this alarming figure, and we're talking about the RBA rate decision that comes next week here in Australia. And before I dive in, as always, if you can help us grow the channel by hitting the subscribe button and the little bell, if you're watching on YouTube, and if you're watching on Facebook or LinkedIn, do us a favor, hit the like, leave us a comment, and then maybe share it to your network so that more people get to see this information, and hopefully they get to make more sense of what's going on in the world of finance, money management, and investing so that they can have better outcomes. So alarming figure, let's go across and have a look at how that turns into a new headline. Here it is, the August labour force data, unemployment remains at 4.2%. Australia adds 47,500 new jobs. So that's the new headline from this alarming thing. Now we've got the headline which basically said that our unemployment remains at 4.2%. Now, before I dive into this article, let's go and have a look at another one that was on the same page. And this one was that Australia reacts to the US Federal Reserve slashing interest rates. So I'm recording this on Thursday afternoon, and Thursday morning we woke up to the news that the US Fed Reserve had slashed their interest rates, described here as a jumbo 50 basis points, which is also funny and not alarming, but it's a little bit humorous to me because leading up to this decision, they were basically saying that if the Fed Reserve doesn't reduce by 50 points, the market would see maybe a 25 basis point decision to be weak and not enough, and that would spook the market. And then they come along and do the 50 basis points, and they're calling it a jumbo interest rate cut. It's always funny to see what goes on with the journalists and the financial media. But in this article, the reason why I wanted to do a crossover episode is because in this article, they're talking about how the US dropping their interest rates might lead to Australia and our Reserve Bank thinking that it's not such a bad idea to reduce interest rates. And the funny thing about this story is that there's economists in here or market analysts in here who are saying that the US have cut their rates by 0.5%. Because their economy is slowing and there's fears that it's slowing and the job market is slowing, and the Fed needed to get on top of it because they're already on top of their inflation numbers, and so this weakening US economy needed to be given a bit of a boost with this interest rate cut. And if you've been following along for any length of time, you'll know that in Australia we quite often tie ourselves to the Asian market and what's going on predominantly in China, and how China is a big driver of our economic growth. And yet this article tries to suggest to us that if the US economy is weakening and starts to impact global economy demand, then that will impact Australia. Now, that's absolutely true. But it's funny that suddenly we used to take all of our interest rate data from an Asian perspective and what's going on in the Asian markets, And now this article suggests, well, we better have a look at what's going on in the US, because if they slow down, the whole world will slow down. And if the whole world slows down, then we get caught up in that. We're going to slow down. And it was kind of like a call out to the Reserve Bank of Australia to say, let's not wait for all that to happen. Let's get proactive and start doing something, which is interesting because I think, like you've heard me say on these weekly wisdoms for some time now, it's common ground that we overshoot on the way up, we go too far on the way up with interest rates, and then we're slow to come back down. And so this article is kind of like a bit of a whistle to say, hey, have a look at these numbers. They're not great in the US, or certainly it's suggesting that their economy is slowing down. So let's not wait for that impact to hit us before we try and do something. Let's get ahead of the curve. Pardon me. Now, the good news out of this article is that whilst the markets were expecting or almost demanding a 0.5% cut, when they got it, the stock markets went up, but then they closed down for the day, which is just further evidence that the data or the information is pretty much irrelevant to what's going on in the stock markets. Now, people will argue with me that till they're blue in the face, but it's just clear evidence that they were demanding that the stock market needed a 0.5% cut. It got a 0.5% cut, and the market still went down. And so that's very interesting. So that article was kind of putting the pressure on the RBA to say, look, we need to get ahead of the curve here. So let's jump across to the article that I wanted to talk about. And here we are, our unemployment data. So sorry, at the end of that other article, there was a comment that later in the day in Australia, there was going to be this unemployment data, and that was going to be a very significant part of what the RBA might do. So unemployment remains at 4.2%, and we add a fairly minor 47,500 new jobs. And here we are in the byline, dashed hopes of an RBA rate cut on Tuesday. So why did it dash hopes? Well, because unemployment has remained steady, and all these seasonally adjusted numbers, I won't get too bogged down in those, but basically with unemployment staying steady, there is the idea that there's nothing in that information to suggest the Reserve Bank needs to act quickly. So then we go past all the various pieces of data, which don't really tell a great deal of the story. But there we are, unemployment steady at 4.2, still rising a little bit. I mean, the trend here, like we had the downtrend there, and now we're probably slowly itching up, but reasonably steady at the moment. And again, they're talking about all these unusual metrics when it comes to unemployment or employment and the percentages and all this type of stuff that relate to. Well, maybe I should talk about them. They're talking about how our employment to population ratio is at close to all-time highs. So I think the one up here, 64.4, and we're currently at 64.3 when it comes to employment to the population ratio. So that's a close to a record, and near historical highs in relation to women. So all of these things are great, but they're not the main drivers of what we're looking at. And we've got, again, forecasters or economic analysts suggesting that, all this is good news for job seekers, because effectively what it means is there's jobs available if you want them, but not so great for interest rates. And in fact, the RBA governor last week was very dampening down any suggestion that rates might drop. And now the US has smashed their rates with this jumbo cut of 0.5%. Surely they're going to do something. But no, we're not so worried about the labour market. We're actually worried about something different. And the RBA has basically said they still don't think it's coming until next year, and that they're more concerned about the supply side of the equation. So I might not have got to that yet. But lots of information in here on employment. But then we get further down, and the RBA and the government are talking about how The supply side of the economy is what they're worried about, and they need to see some good news in that respect before they're going to cut interest rates. So again, probably slow to react, and we're going to see. We always hear that we want a soft landing. We want the economy to have a soft landing where everything's nicely managed and there's no severe reactions required. But with this cut in US interest rates, it's going to put a lot of pressure on the Aussie market to do something to generate demand. Because if you remember back a few of these weekly wisdoms, a few back, we were talking about how the economy was only really growing because of government spending. And therefore, technically, we're at a household recession level. If that turns into a full-blown recession, then once again, the government and the Reserve Bank will have missed the mark and not given us that opportunity for a soft landing. So what does that all mean? What can you do with all of this information? Well, as per normal, when I do these videos to show you how difficult it is to navigate your way through all the minefield of data, but also at the same time to demonstrate to you why we don't necessarily have to get bogged down in this data and just use it as something that's informative, helpful to an extent, but not paralyzing when it comes to your investing journey. So in this respect, I'm going to go out on a limb and say that we will not see an interest rate cut next week, and that's hardly going out on a limb. It's absolutely what's going to happen. The Reserve Bank will not be cutting interest rates next week in Australia. And more than likely now, if our economy has slowed to this extent, they're going to be looking for one piece of data that tells them that the opportunity to cut rates has arrived. And this unemployment data is not it. Maybe a massive fall in the inflation rate will be it. And we'll see that in coming weeks and months. But as for now, the inflation rate is still above where they want it to be. Employment is steady, or unemployment is steady, and therefore the economy is not necessarily weakening in any respect from that data metric. So they're going to look for something else to hang their hat on before they cut interest rates. And I'm not going to get into this bottom section of the report. It's all politics there, and who's taking the credit or the blame for what's going on. We're just seeing the data, and we're going to react to that. And so, as I said, I still believe a cut in the US is going to put a little bit of pressure on the Australian market to follow suit. And it will be interesting to see if the US economy does slow down to the point where it impacts global economies. But as we tend to do, the Australian market is much more aligned with what's going on in China and how they may, or their demand may impact our economy and the growth of our economy. So we'll look out for that data and see if something comes out to suggest any weakening in that side of our economy. But for now, we've got a big rate cut in the US. Will that impact the Australian market before Christmas? We'll have to wait and see. But at the moment, unemployment steady, and therefore they're doing nothing in relation to interest rates next week, and we will continue to pay those high rates. So again, what does that mean for you and your money management and your investing journey? As per normal, it just means keep sticking with it. I'm sure there's some heat from the high interest rates, but relief is coming. And this is the first sign with the US cutting rates. We know that means it will flow on here to Australia soon. And so the relief is coming on interest rates, and that's going to open up the bargaining position as we see what banks do with those interest rates. So I was talking to clients this week about the fact that if we saw a 25% or 0.25% cut in interest rates, highly likely the banks won't pass it on in full, and therefore competition will be on to retain your lending business. And we will be back in control of that negotiation to an extent. So keep investing, keep managing your money. and do your best to get some of it into investing to grow your wealth, because it's all about consistency and not necessarily about what's going on around us. We like to know about it, stay informed and keep watching these videos, but we don't want it to stop us from moving forward. So I hope that was helpful. As always, hit the subscribe button if you're watching on YouTube and help us grow the channel so more and more people get to see these videos. And if you're watching on Facebook or LinkedIn, give us a like or even a comment, just so that we can fuel that algorithm and more people can see what we're talking about, and hopefully gain something from what they're hearing that helps them and you with your money and investing journey. Have a great week. I'll see you again next week for another weekly wisdom video. Cheers.